Hey guys, Ben with Income Options Trading here today on Friday, December 13th. Ended the week off pretty well, up about $1,000 today. So ended the week about $2,500 up, which is nice way to end after Monday and yesterday were decent red days. So was much better mentally today than I was yesterday. If we look at the SPX chart today, VIX was down overnight, so I decided to do the reverse iron condor at the open. So right after the open, I put on my reverse iron condor. Market had a decent up move right away. I was in the green a little bit here. I could have taken it off, but I didn't. Market came back into the range, and I was a little worried at first. I didn't know if it was going to just go sideways from here, but it continued downward. And so I got back into the profit down here. And on this green candle here, about 9:46, so about just over an hour into the trade, I decided to take it off here. I think for like a $500 winner. So decided to take my profits here. The actual trade, the way it's back tested, the longer you hold it, the more profitable it is overall over the long run. And if you look at it today, my break even line is this inside diagonal line down to about 60.55, and so it would have been about a $400 winner. So basically the same if I took it off here versus let it expire. So it, in hindsight, it didn't make a whole lot of difference, but after being in the red yesterday, I wanted to take some profit off the table, so I did that then. Again, the afternoon, about 12:30, we were in a uptrend here, so I decided to put on a short put spread with a short put at 60.35. That was a nice winner, was never tested. And then at around the 114 and the 130 mark, I put on two more short put spreads, both with the 60.45 short put. And I kind of went against my rules here. Normally I would take this off usually after I have a full candle that's below the line, both open and close. But if we, go here, 2 minutes. If I zoom in here, I actually put in a stop order as the market came down a little bit here. And I just put it basically for break even, and it actually stopped out basically at the bottom of this red candle. So really bad timing on my part, but wanted to lock in that profit because I wanted to end the week on a good note. So in hindsight, would have been a lot better if I would have just let it go, but that stop happened here and it bounced right back. So, if I would have had the stop at like 40 cents higher, then it wouldn't have filled, and I would have been still in the trade. But it could have easily continued to drop here. It's hard to tell sometimes. So took that off there. So those were my only trades today. Took it a lot easier. $1,000 a day, that's not going to be that's not bad at all. So happy to take that. If you look at the overall market, the S&P didn't really move much today. It's down a little bit after hours here, but only about 0.1%. That's not a whole lot. Nasdaq was up decent today compared to everything else being down, led by Tesla. Russell was down almost 1%, and the Dow was down a little bit too. So most of the market indices were down besides Nasdaq. Also today, futures are rolled to the March expiration. Usually the future contracts expire next week, which is triple witching or quad witching, whatever you want to call it. But so today was the start of the roll date from the December futures to the March futures. So the volume was pretty high today at 1.9 million on average. It's usually like 1 million-ish. So it was a decent day. It's really interesting if you look at the volume down here, the spike. So we did have a decent spike on this red candle here, but the majority or a lot of the volume came on the last really 2 minutes here, and even the first 2 minutes after hours. just a lot of things can happen right at the end there, but a lot of people rolling into the next futures month here. So if you do have any futures contracts on, you'll want to roll those forward if you want to keep those on. Anything else I want to talk about? Yes, Option Omega, which I use for back testing. They have a really big announcement coming up on Monday. A really big new feature for them. I can't share the details, but they're going to have an announcement Monday on their YouTube channel. It's Options Omega. It's I plan to be there as long as I can be listening in. It's they have YouTube and Discord. If you're not in those communities, they're free. Those guys are great over there. Really happy to be affiliated with them. But they have something really big on Monday. After that announcement, I'll be able to talk more about it. But it's something, if you're into trading, you'll want to listen in if possible. So that's on Monday around lunchtime. That's the big thing there. Next week is the FOMC meeting, where they're expected to cut by 25 basis points. So that's what the market's pricing in. That's what everyone expects. That's what I think the FOMC will do. But if they don't, I think you could see a lot of volatility before Christmas, before the new year. But we'll see what happens. The inflation numbers this week were kind of on par. It's still there, so I'm surprised that they're cutting. A lot of people or economists are thinking they're not going to cut next year, or maybe one or two. It's just really interesting when you think about at the beginning of the year, they were a lot of people were planning like 6 or 7 rate cuts, and they only cut once so far this year, and it'll be a second time here coming up if they do that. So that'll be a lot of volatility or potential if they don't. But another thing I want to go over next week in a video is T-bills and how you can use them to bump your yield with basically without impacting your trading ability, or at least for me, with being 0 DTE. The T-bills on Tasty are margined at 94%. So if you bought $100,000 in T-bills, you could still have $94,000 in options buying power. So if you're using 50% of your buying power each day, or $50,000, and you had, say, $150,000 in cash, you could buy $100,000 in T-bills, and of that $100,000, you would still have the $96,000. Your cash would go down from $150 to $50,000, but you still have that 94% of that to play with options, especially if you're doing credit spreads, stuff like that. You don't need cash. But if you do lose on a credit spread, your cash value does go down. But the nice thing with credit spreads versus debit spreads is if you have, say, $10,000 in cash, you open a credit spread, that credit goes into your cash account, or into the cash bucket. And when you close it for a debit, it takes it out. So if that trade is profitable, your cash never goes down your starting balance. Whereas if you do a debit trade, your cash is debited, and then if you close it for a profit, then the cash would be above. So one nice thing with credit is you can be a little bit more flexible if you have less cash but more buying power. So don't want to go too far into the weeds now with that, but that's what I'm going to do next week. Also planning to do a portfolio breakdown of what my plan is for next year, go over my goals for returns and for drawdowns, talk about different things you can do if you trade for a living on taking cash out of your account. On Options Omega, they have a portfolio backtester where you can take it out monthly. I advocate for quarterly if possible, just because you can compound a little bit more. So I'll go over that too if I can. But think that's all I want to talk about. I hope you guys have a great weekend, and thanks for watching.